Talking about Clicks now. Now, Clicks is a health and beauty focused retail and supply group which has been listed on the JSE since 1996. They are a market leader in the healthcare market, where they have the largest retail pharmacy chain with over 200 in-store dispensaries. Now, their trading update, and I want to start with you, Anthony, in this one. Their trading update issued on the 17th of Jan spoke about a tough trading environment, and they reported sales on the Clicks division. We're talking about 8.1%. On the retail side, we're talking about 6.7%. I don't know what has happened in the intervening period between that time and now, but with it being February 14, I would imagine Clicks, given the products that they sell, they would be profiting. How big a bump does that make in the overall profit outlook and sales outlook?
I don't think Valentine's Day is going to really make or break their trading period. But, you know, I think this used to be a very good story type stock. You know, they were the first to kind of jump on the bandwagon of putting dispensaries at the back of their stores, getting people into the back of their stores, getting them to walk past all sorts of kind of must-have type items, like appliances. We think that that kind of market, or that model, has been replicated across the market with Dis-Chem, with ShopRite, with Woolies. You know, there is no kind of, you know, there's a lot of Me Too kind of new entrants into the business. Yeah. And as a result, we're starting to see them lose market share for that type of kind of convenience niche. Yeah. Having said that, you know, I think the management team is good. I think that there is fairly steady growth forecasting, and I think this business generally grows at about between 5 and 7% in terms of volumes. Could probably do 5% this year. Yeah. You know, the Musica business, I think, is under a lot of pressure, but the core retailing business in the Clicks group, I think, is fairly solid. Yeah.
Now, with the big retailers coming in, Daniel, you'd imagine, you know, as you're taking on your ShopRites, your Pick and Pays, and all these other guys who are getting into the pharmaceutical side of the business, what do they have to do different to reinvent themselves, if you like, and stay relevant?
I think the pharmaceutical threat from the big retailers isn't that big. I think if you compare I don't think so. I think if you compare the number of pharmaceuticals in the large retailers to Clicks, it's not significant. It wouldn't compare to the competition from a Dis-Chem, for example. But what you are seeing, what you could see from the trading update, is that everyone expected a bit of a pullback in the Click side because the SEP, the single exit pricing, was set to 0. Right. But what was a bit surprising was that the general merchandise and the beauty and the front shop sales also took a knock. Now that is suffering from competition from the retailers, and what that's going to do is, as that decreases and the dispensing side increases, the dispensing side is at a lower GP margin. So the mix effect of the Clicks group will gravitate towards a lower GP margin as long as this competition from the retailers intensifies in that space. Yeah. So what's the outlook for them then, given this very difficult trading environment that you're speaking about? Because they do speak about price deflation in that trading update that they gave in the middle of January. Well, I think that they've got no relief from the latest SEP announcement, which I think was about 2.14%. Percent. Yes. But if they can fix, I'm not exactly sure what happened in that space. I think that's going to be an interesting topic for management to discuss. Yeah. But they need to address the difficulties they're experiencing in beauty, general merchandise, front shop sales. If they can address that, it's still a good growth story. But like I say, we'd have to see exactly if that is a structural problem or perhaps it was once off. We'll have to see when the results come out. Yeah. Now, given the fact that they are facing so many, you know, big, really big boys, is there a case here for this company to be looking beyond the borders of South Africa or Southern Africa and really perhaps move aggressively into your likes of your Nigerias, your Ghanas, and your other fast-growing economies?
Yeah, I think that the competition issues here are making it very difficult for them to grow, and as a result, they need to re-engineer, reinvent themselves, and look for more growth opportunities.
So, I'm guessing the answer to my question is going to be love or no love here?
Yeah, we think this business is kind of fairly priced on a forward P of about 14, dividend yield of about 3.5. There's a lot of question marks in terms of growth, but again, it's not a terrible investment proposition, but we would just be mutual or neutral on it.
So that's not quite no love.
No love.
It's no love.
No love.
It's no love. There's some kind of warmth, but not hot enough. Dania?
I'd say that based on its pricing, and it's lower than the retailer's growth prospects.
Right.
And it's not offering a significant discount in terms of valuation. So it's basically being priced similar for lower growth.
Right.
So given that outlook, I'd say I don't hate it because it's a great company, but they are facing some headwinds. So I'm not sure between no love and love. Can I just say friends? Or
I think you can say friends.
Okay.
I think you can say friends. I'm reading neutral across the board here. Certainly there is respect for management and what they have done.